You're listening to the BIGCast, your source for the latest in financial technology. Brought to you weekly by the Best Innovation Group, with your hosts, John Best and Glen Sarvati.
Hello, everyone, and welcome to a very special predictive edition of the BIGCast, where we attempt to be prescient. And it's always fun to do that. It's the beginning of 2026, and it's time for our prediction episode. And with me are some amazing people. My name's John Best. I'm the CEO of Best Innovation Group, and you can find me at Big-Fintech. We have Glen Sarvati, really the mastermind behind all of this. Hey, Glen.
How you doing, John? Good to see you. Happy New Year.
Glenn's with 420 Cannabis Industries. That's his main gig is growing cannabis. And then we have Lou Gurley, who I think is also in the cannabis industry, if I'm right.
No, I'm not.
Congratulations, Lou. You've joined me in the gutter.
Yeah, well, you had to be somewhere. And then the infamous, the one, the only, John Janklius.
Who wants to be in the cannabis business, but it can't get in there.
Hey, I'm helping you be in it. I gave you a lead into that business. So
you did.
Yeah, so you should be happy for me. Yeah. Well, I'm coming to you from Colorado, and normally what we do on these episodes is we kind of go around the horn, and we look at our predictions, I believe, from last year, what went right, what went wrong, and where we ended up. I think we've already done some of that. And then we make our current predictions for 2026. And so I have to say it was a really wild year with our bingo card, which was Glen's idea for last year during our town hall. And that was kind of predictive as well, right? There was a lot of sort of if this happens or that happens, and I thought there was a lot done. So yeah, I'm super excited to go through this. So I'm going to let Glen run us through this. I'm happy to start it off if you want, but
yeah, why don't we figure we'll do roundtable and everybody's thoughts. It'll be a miracle if we don't overlap to some extent, so we can both agree and disagree with others' comments. Our colleague Ann Legg was unable to join us because she has the benefit of being off in Europe for a while, and the time zones just weren't working. But she had sent some to me, and I'll throw those some of her perspectives in along the way, including the all-important Bitcoin price prediction, which we'll wrap up with at the end. But John, why don't you just get us started with John Best? Why don't you get us started with your first prediction?
Here is my prediction. 2026 will be the year that we see the first massive AI worm. Or I'm going to call it a worm, but really it's not going to be a worm. What it's going to be, I'm going to give it a new term. I'm going to call it an agentic worm. I think we've seen signs of it already. But we're about to see, I think, given what's been going on, we're about to see that really be ramped up quite a bit.
Is your thought, would that have like catastrophic consequences, or will it be caught in time and be a wake-up call?
I think it's going to be related to, it's going to be something that will take down websites, take down companies, and if they're not careful, it will cause lockups like ransomware.
Interesting.
The purpose of the worm will be to make money. Okay. And it won't be one group. It'll be a state actor when we finally figure it out. And this time, unlike the Maersk issue that we had, which was a long time ago, where there happened to be a kill switch that somebody happened upon, I'm not sure there'll be one for this one. And it's going to be interesting, specifically if it's, state actor. And the reason I say that is the hardware is getting better and better to run these AI systems, where you can run them locally or you can run them on individual systems. Two, we're learning more and more about how the LLMs work and the capability of creating your own or creating an unlocked one that'll do, things that, that'll do things that are nefarious is becoming much easier. And I think with all the turmoil in the world, given what's been going on, we're going to create enough ill will within the world. We've already created enough, but where somebody's really going to make an effort. That's my 2 cents.
Thanks for getting us off on such a positive note, John. We can always.
I thought I'd get us there. Hey, I think everybody should be planning for this. I've been advocating it for it. Is you've got to fight AI with AI. So you're going to have to find AI platforms that can sense this, because now it's like fighting AI with a common firewall or something like that. It's a little like, battling a computer with a with a wooden spoon. It's just got a lot more options, and it's not the same tech, and so it's just going to be very different. Something that can morph the way AI can. I was thinking about this. I'll share this. This is, I hope no one's listening, but I was thinking about and Lou will get this. He'll appreciate it. So will John. All of you will. But I was thinking about DDoS, right? Distributive
Denial of
attacks.
service.
And the way they work today is someone goes through and creates a lot of traffic and it hits. And the way we kill it is we see that traffic coming and we look for its signature and we kill it off. But what if that traffic is intelligent? What if it constantly changes? What if it's smart enough to see what's going? And so that's the new future. That's what I see.
This also reminds me, we've had things in our predictions several of the last recent years around cyber attacks, around ATM outages. This is basically just the latest frontier and the latest threat vector of some of those same kind of fraud situations, or just ill will, nefarious action. But this is the natural, opportunistic way of putting it out there.
Well, and some of the signs that I'm sorry, go ahead, John.
Hey, John, what do you think the readiness is of credit unions without being, too pessimistic or whatever? I mean, but are we on a grading scale? Are we an A, a B, a C, a D? This emerging, but we can't be any better than a C, I would guess, with this kind of new technology. Where do you think we're at?
D plus, C minus.
Oh, really? Okay.
And probably no worse than the banks. I mean, maybe
no worse than anyone else. No, we're not special. It's just, it's going to be hard for everybody to keep up with this. I mean, every coder is now 100 coders. It's just gotten that good. Yeah. Every bad guy can now be autonomous, and that's a very different mode where someone can just set it and forget it and turn it loose on something. So we're just entering a whole new era, and I'm not sure. I think it's going to be a wake-up call at some point, and that's what's going to drive forward. But I do know a lot of people, a lot of big companies are working hard on solutions for this, and we need to seek them out. But at the moment, I don't think anybody's ready, because it's hard to get ready for something that you don't know what it's going to look like. I can sort of theorize about what's coming, but it's hard to tell. And there's so many options, so many crazy options. So great question.
Lou, I'm remembering we had a little earlier conversation. I remember one of your predictions had to do with the AI bubble. And given the way John has now set the table, I think that might be an interesting one to jump into.
So thank you, Glenn. John, since you started us off on an AI kind of doom prediction, I'm going to give a positive prediction that the AI bubble that has been spoken about in lots of news will not pop in 2026.
I actually agree with you. Here's why. Because I can visibly see the value that's being provided. And that's the whole key to the bubble, is when there's no value, when you can't quantify the value that's being provided, is when things crash. And this value just keeps going up. So yeah, I can see that.
John,
provided there isn't sort of a setback with something crazy like we talked about.
Lou, I'm curious how you're defining the bubble. I think of it, I mean, when I hear a bubble, I usually think stock price, which is obviously a big one. But there's also, the public perception of AI, the number of use cases and adoption and penetration. Are you kind of any more quantifiable than just the notion of a bubble not popping?
All right. I guess here's my oversimplified. I was afraid you were going to ask that. For listeners, here's an example of what, in my mind, defines the bubble. OpenAI is not profitable. Sam Altman has publicly stated that it won't be profitable until 2030, maybe 2029. Meanwhile, I've seen some graphs. The OpenAI buys hardware from NVIDIA. NVIDIA invests money in OpenAI. OpenAI pays Oracle $300 billion for cloud services. Oracle, in turn, buys NVIDIA hardware, which in turn turns around and invests billions in OpenAI. Microsoft and AMD are part of this universe, this bubble. Money is just circulating inside this bubble. So the amount of money going in one door and out the other makes the industry look, again, my opinion, a lot larger than it really is. And it's these inflated dollars that in turn attracts outside investments. So a bubble bursting in this case would mean investors no longer believe what John still sees the value in it, believes that the money flowing in this bubble will not lead to the expected profits. But again, my prediction is this burst, correction, if you will, I do think something has to give, but it will not happen in 2026 because it's still early. It's still growing.
I was going to say your description was not giving me a warm fuzzy. So you're not saying there's not a bubble that's going to burst. You're just saying it's not going to burst in 26.
That's my prediction.
Gotcha.
And I to tack on to that, I think what I would add to that is, depending on what happens in 2026 will tell us what's going to happen. I think there's some big plays that have to happen, right? There's folks like John and his company. How quickly do these agentic pieces get pushed in? But from what I've seen, and I'll just use an example. There's a company I've been working with called Databricks. I've never had a company push me. I've always had to push the company for whatever the new features are. I can't keep up with them. It's a combination of a couple things. It's one, cloud-based services, because deployment is now no longer in anybody's vocabulary, right? Deployment happens via the cloud. It's a double-edged sword because new things can just pop up, which is sometimes confusing for folks. But at the same time, if you're waiting on those features in a traditional deployment that's local, that could be forever because we all know how long it takes to upgrade. So that's been another powerful, I'd almost call it a bubble or a loop as well. But the fact that I'm just seeing these companies just move so quickly to provide services and value, and I'm also seeing sort of what the foundation looks like crystallized. So I think I agree with Lou. I do think there is a correction coming, but I don't think it's a bubble popping. Sorry,
it's
John,
an interesting loop to see how fast CapEx is metabolized and returns in jobs for other people, and also these benefits that we're talking about. By the way, the bubble last time was 70 times earnings. We're only at 30 times earning on the Magnificent Seven. So we're a ways away from that kind of euphoria that was back then. So I'm a little more bullish. I think it is a little bit more sustainable. I think this kind of science is a different kind of science than we've seen before, between when you spend that capital and when the returns start coming back in. It's a pretty quick feedback loop.
Your 70 times earning, you're going back to the .com bubble, or which one are you referring to?
Yeah, .com bubble.
I wonder, and I'm not disagreeing with you. I think that's a really interesting way of looking at it, but I wonder if there might be a little bit of apples and oranges, because this time we do have several of the big players are already companies with meaningful kind of profit track records, whereas all of those, it was like the entire, denominator was, a very low level of earnings, whereas here we got the Microsofts and the Googles of the world. But I think it's still a point very well taken. Now that we started off on, I guess, half optimistic, half negative view, what do you got?
Yeah, to me, it's I'm an optimist, as you know. And when I look at the world, what's happening, I just think you can feel it happening. Kind of a culture reinvention is what I call it for credit unions. And if you think about cultures being people, process, and technology, boy, all of those are really in flux and changing. Just think about with our people. Are we really working at full capacity, working from home or in a hybrid, or if we call people back to the office, which a lot of companies are doing? How's that really going for optimization? Think about technology. We have more technology partners, new kinds of technology. How well are those implementations going? Are they getting the return on investment? Have we figured out how to partner and really manage with fintechs? Are we at full potential there? And then you just think about the processes that are being enabled by the new sciences with data management, AI, agentic AI. So somewhere in there is, we're not optimized all of that, which I call your culture. That's how you get your mission done. So it's an interesting time to step back and think about, have we got this engine really humming yet? All these pieces that are flying here. And some attention to that, I think, is my prediction. People are going to have to kind of come back and look at that. Throw mergers in there too, right? Huge organizations coming together. How do you smash that together and make it a net effect good, in reasonable time? So if the game is on, in that area, and I'm hearing leaders being thoughtful about that.
You're saying kind of 2026 is kind of an inflection point on that? Is that the way you see it?
It feels like it. Some of it is some of the pressure that's on the balance sheets and income statements at credit unions. You can get into that a little bit today too. But it's like you can really feel like it's really on, which is really motivating you to take action. So, hey, good for us that we're making the investments and the expenditures, and we're exploring in things like investing directly into fintechs as partners. And there's all kinds of wonderful things that are happening. We are venturing into the new world, but now we haven't quite got it humming yet. And that's to be expected. That's not a criticism. It's just saying that's a good time to double back and kind of focus on people, process, and technology, our cultures. Yeah.
And it sounds like, rather than just pure theorizing, my understanding is you've been out in the field kind of gathering some data points on this through some of your executive coaching work.
Yeah, executive coaching, and also working, with fintechs like Nimbus and Akuvo, being out there. I've been in all but 4 states in the last 4 years and over 150 credit unions. So a great opportunity to listen and perspective, and just listening what's happening and the challenges that they're facing. And having, run a shop before as a CEO, it's like I can really feel the weight of it. It's work to be done. It's not trivial. There's real work to be done on culture.
Anybody else want to weigh in on that one?
Two things for John. One is curious as to how we can quantify that at the end of the year to see how close your prediction is. And you did mention some credit union metrics, financial metrics, but you also just brought up briefly, but it's worth pulling out there, mergers. So I did have a prediction that mergers it's a no-brainer. Mergers will increase. So I'm predicting a specific number, at least 150 in 2026, or maybe a rolling 4 quarters. And I just bring that prediction, throw that in there, because every time there's a merger, John, what you're saying, which I don't disagree with by any means, that starts all over again with integrating cultures and people, and the technology is, in some mergers, huge impact.
Yeah. And we know that something like 70% of mergers do not deliver what the intended outcomes were that they wanted from the get-go, right? So there's risk in implementing well. So, yeah.
I'll be a bit of a contrarian. I'm not saying that merger mania is over by any stretch. And I think we may see some more. If for the longest time we've seen declines on the small credit union side, I think we may see some big name ones kind of happening the way we did with this past year with I'm blanking.
Wings and
Wings and
CCU.
yes, exactly. The really big guys, folks, like, as we talked about, if you're going to go over 10 billion, you might as well go way over 10 billion. So folks sitting in kind of the 6, 7, 8, 9 billion range coming together to go right over 15. So I think, and it's one of those weird mathematical things. I'm not suggesting mergers slow down. I expect we'll see about the same number continuing, but again, the denominator is getting smaller. So that's a bigger percentage of credit unions that are continuing to merge, which means the number keeps going down overall.
The total assets that were merged in the third quarter were equal to all the mergers assets from 2022 through 2024. Isn't that amazing?
And I think we're breaking the bank number again too. So we again went through, more banks are being merged. The community banks are, I think, looking for those opportunities, which is fascinating to me.
Glenn, back to your point, how many can we metabolize? Like, in sheer numbers, there's fewer numbers, but how many can those really big mergers handle? Integration of 2 organizations. You might have to take a year off before you can take another bite at the apple.
That's a great point. I mean, that is no small undertaking, trying to smash together 2 large organizations and cultures. JB,
well, it's funny because that was what I was going to say is, there are 2 things at play there. Culture is certainly the most important one, and I 1,000,000,000% agree with Mr. Janklius. However, from a technology standpoint, as you know from what we've done at Big, we've actually been really refining the merger process using AI, and we're not like dumping member data up into the sky. It's more just the mapping, but even some other things that are very interesting, which is personnel, right? Being able to take 2 personnel org charts and sort of combine those and see where the overlap is and what that looks like. We've really kind of started to take that process down. And what I see happening, I believe, for these, there's really good opportunity for the 3 and the 4 billions to become 10 and 15 billion with the right partners. I think that the big guys, like you said, they definitely are. The bigger you grow, the harder it is to turn the Titanic, as we know. But you look at DCU and First Tech, that's a $30 billion play. 30 billion. I mean, that's a good sized credit union. But I think what's going to emerge out of this is the winners are going to be people who started this year and maybe looking next year at developing a playbook on mergers, developing an M&A team, not making it sort of, it cannot continue to be this one-off process internally. It needs to be something that's repeatable.
That sounds to me like a game that I saw back in the 90s, I guess it was, where Bank of America just had it down to an absolute recipe book. And they would just make a succession of
They run in,
acquisitions.
grab
They
First
came in
Union,
with the
whoever.
binder, and that was the way it worked. And then that all culminated when you brought the two big organizations together with Bank of America.
And then your debit card from the old place never worked again, and the balances were never right.
Well,
Just ask Barnett.
After those three big ideas, I feel like mine is tiny, but it's also very measurable. It's binary, yes, no. My prediction is the proposed settlement with the Visa and MasterCard with the merchants, which was, yet again proposed and supposedly, announced and brought to the courts in the last, I think it was still in Q4, might have been late Q3. I am going to predict that that's rejected once again. This case has been going on now for a couple of decades, and I don't think it's done. There's so much noise out there that I think that yet again, the courts are going to go, yep, not this one. Take it back. Take another look. And there's no love lost. There's no lack of confusion and noise and turmoil. And even I don't think the merchants are all on the same page as well. So I think we're going to be talking about that again come mid-year.
Agreed.
Anybody disagree, or is that almost a no-brainer, as Lou said?
Yeah,
I'm putting that in the no-brainer category too.
Yeah, me too.
I'll give you another one then. Here's another potential no-brainer. Another big story that is, I think, not yet done. The Illinois Interchange Act.
The Prohibition Act.
Prohibition, excuse me. Or as John once called it, the worst IPA you ever tasted, the Interchange Prohibition. Again, it's in front of the courts. It's supposed to be imminent that they're going to be ruling something, regardless of what the courts say. Either if the courts throw it out, then nothing happens. But if the courts do say it's okay, I am suspecting, you may remember that the Illinois legislature went back and extended the implementation date by a year. It was supposed to go into effect July 1. My prediction is come July 1, they're going to extend it again, because everybody's sitting in court, everybody's trying to figure out what's going on, and I don't see a whole lot of action getting any closer to being able to execute on this. And I think that the legislatures at this point, legislators kind of figure out that they went over their skis in terms of the ability of how this is going to work. So I think this is just another one of those cans that keeps getting kicked down the road. No brainer?
That's a yet to be seen.
Yeah. I don't know that that's a no-brainer.
Interesting. Okay.
Mm-hmm.
I think that, and here's why. I just think that payments are still shaken out, and things are getting weird thanks to fraud. I think that 6 months ago, I would have told you Venmo's a clear winner, but now I'm watching other things fracture that. I think this actually leads me to one of my predictions, if you don't mind me piggybacking on that. I think that there is this year, or this 2026, a major retailer will launch internally and on a beta their own stablecoin payment system. And that to me sort of dovetails with what you're talking about. And what I wonder is what the push is behind these things. Do they shift that and start thinking about, hey, let's not fight this war over here. Let's just go around it. And I'm wondering if that's what's going to happen, because the Genius Act with regards to stable coins, everything has to be done in 2026 so that you're ready for 2027. So I'm predicting a major retailer, and I think that at that point, it's very scary because that money with regards to what you're making on that is in jeopardy. It's already been in jeopardy for some time and continuing to drop. But now I think that you could see some major bites out of it. I don't know which retailer, but I think it'll be a major retailer that'll take that chance and they'll ramp up something.
Lou, am I remembering? Didn't you have something very similar?
John, it's like you stole one of my predictions that stablecoin. We will see at least one major retailer, and I put in, for example,
I did
Amazon.
not read your predictions. I apologize. I didn't have a chance to read any of those emails,
That's
so
fine.
I'm so sorry. But okay, so I stole your thunder.
That's good.
literally, I wrote at least one major retailer, parentheses, Amazon, Walmart, issues their own coin, and a corollary to that we will start to see adoption. I'm maybe backing down from my 5% prediction, but adoption of digital asset wallets across US adults. In other words, someplace to hold these coins that are being issued. And to, as a corollary, at least 5 top banks will begin settling in stablecoin alongside, obviously, their existing settlement.
It's interesting. So I'm about halfway on this one. I in terms of a retailer actually getting down this path, I mean, from an announcement standpoint, I absolutely agree. I'm not sure when you actually treat it as truly commercially available, even if it's technically in market, but no one's using it, who cares? I'm not quite as bullish that we're going to have meaningful traction and adoption in this calendar year. But it'll be interesting. So in fact, I think some might even argue that given the slew of stablecoin announcements over the course of the last 6 months, that we may have even hit some of that threshold already. But I don't know.
I'd be interested.
I'm not sure it's going to go quite as quickly.
I'd be interested in Mr. Janklius' comments on this, because in order for any of this to work, the systems have to support it.
True.
So, what you got there, John?
I'm just watching time collapsing on how fast we can do things. Like if there's such thing as compounding effort, like what we can do in a certain amount of time is it's breathtaking. And why not settle in stable coins? I mean, there's all kinds of other assets now that are moving onto the blockchain and being settled. And I think I'm kind of with Lou. It's coming. Maybe not by the end of the year, but I mean, just like if not the end of the year, it'll be the next quarter. I mean, that's just the way things seem to work now. Time is just accelerating how fast we can come to market.
Well, you know what's interesting about that, John? And this brings me to another prediction for me, and then I'll stop because I know we're on time here, but you're right on target there. Most of what we're talking about is related to code. It's not physical infrastructure. It's not running cables. It's not digging up the ground. It's writing code. And my prediction for one of my predictions for the coming 2026 is that we'll see a lot more of, and I'm very excited about this, less vanilla services and features from credit unions who take advantage of products like yours, John, and others that have SDKs, where if those providers, the Alchemies, the Q2s, and all the folks in that world support agentic coding, it's going to make it a lot easier for people to go away from sort of the generic offerings of home banking and develop back to the old days, these services and things that are related to the main segs or of the credit unions. For example, a lot of the oil credit unions that provide ConocoPhillips and stuff, they were looking into direct or U-Post and depositing checks, remotely, even before there was anything from USAA or that sort of thing. So I think that vibe coding and that just compounds everything. Every developer is now, 10 developers if they want to be, if it's embraced. So I think you're right about that acceleration. I really do. And I think that's the whole water in the harbor, all the boats go up. John said that to me once thing. So was it all the horses in the stable get more hay? I forget. It was something weird he said.
Before we go back to John Janklius, I just noticed one of Ann's predictions, I think, dovetails nicely with what you had said earlier around efficiency and the way the workforce is kind of set up. Her point was, efficiency has always been kind of associated with cutting costs. And one of her predictions, which is, I think, maybe a little bit harder to quantify, efficiency will officially replace growth as a primary strategy, and growth will follow anyway. So her point is, if you can get more efficient, that's, I think people tend to think of that as code word for staff reductions, slashing costs. It doesn't necessarily have to be that way. And I'm not sure exactly how we would follow it and if we can tell in 2026, but I think it kind of ties back to what you kind of said about culture, John. Would you agree?
Yeah, I do. Maybe we replace efficiency with yield management. We can get more yield, right?
Yeah.
At every FTE or every interaction or every member or every household, or like there's a real opportunity to really plus that up. You can feel it now.
You know, what's interesting about that too is that I think there for 2025 and 2024, the expectations were just really high. Everybody wanted 100% out of these agents. But, you know, I often tell people, hey, if it gets you 50, 60% of the way there on something in minutes, isn't that an efficiency gain, right? And the rest will come over time as you understand the process. I think that's one of the things I think Lou's kind of alluding to in his previous prediction about the bubble is that people are going to begin to have realistic expectations around what the results of AI and agentic products are. And when we get past, and this is a very big credit union problem, which is the 100% rule. We're not doing anything till it's 100%. And the world just doesn't work that way anymore. So I think we're going to have to embrace sort of, hey, you get the results where you can, and you know, it's very powerful if you do that.
John Jenkins, I think you had another one that falls into the very clearly quantifiable bucket around the Fed.
Yeah, so I think it's pretty much people are saying we're looking at 2 rate cuts probably this next year. I think we'll see 3, and I don't think we'll see 75 basis points in cuts. I think we'll see 100. I think we're going to see recessionary things start to kind of flare up in the workforce. And we're already beginning to see that. If you're a stock person, not the Magnificent Seven, but everybody else is starting to, hiring is slowing and hiring is starting to go in. These efficiency gains are being able to be baked in. And when that happens, along with a new Fed chair being there, which will be a little bit more dovish, I think we're going to see even more pressure to push to have rates come down. So I think it's going to be 100 basis points in 3 cuts, like, 50, 25, 25 is what we're going to see. And right away, you would say, hey, yay for credit unions. I'm not so sure that we're going to capture all the gain from that. There's so much competition for core deposits and deposits that that competition you won't realize the 100 basis point drop into your margin. Maybe it'll only be 75 or 50 because the competition is still going to be fierce on deposits. So that's going to cause compression on earnings. So, hey, yay, rates are dropping, maybe. But don't count on all that being banked for you, in your cost of funds. I don't think you're gonna realize it all.
I would pretty much agree with all of that. I mean, I think the 100 basis points, whether it comes in 2 or 3 cuts, I tend to agree. And I agree, it's not all just sunshine and happiness there in terms of it just falling to the bottom line. So yeah, no disagreement at all. Anyone else, Lou, on that or any other on your list? I got one more, and then we'll jump into Bitcoin.
So I was hesitating to bring this up because it sounds negative, but following along with the kind of macro level that John Jankley started us down, I am predicting, going out on a limb here, that we will see some type of market correction in 2026, and I'm putting a number on it, 15%. And it's going to come from something unexpected, possibly, I don't know what it is because it's unexpected, but possibly geopolitical, like China invades Taiwan. I just saw something in the news about Chinese government is in their news telling people that the capture of Maduro from Venezuela is a playbook that China can use for Taiwan. Maybe the US gets bogged down in a war in the Middle East, or I don't know what's going to happen, something like that. However, a market correction of 15%, the market will recover, and a Santa rally at the end of the year will bring the market right around what it started at, maybe a little bit higher.
It's funny. I generally agree with you. And I think we've been expecting a correction for so long. I actually think the correction is going to be even deeper than that. I would say 20 or maybe even a little bit more. I also agree that we're going to see that same bounce back. I'm not exactly sure. I don't think that the year will be as good as the last few, but I do tend to think it'll probably be a pretty tepid, but a still modest increase over the course of the year, but with a bigger trough in the middle. Anyone else? Mr. Optimist. Mr. Optimist.
Yeah, but we don't have to look far for it to go back up, Glenn. So I'm agreeing for you. The average correction time when we have a hit and then the market starts to go back up is 4 to 6 weeks. You would think the duration would be longer, right, for investors? Yeah. You get right back in there. We get right back in there. Yeah.
That's going to dovetail into the Bitcoin piece really well. But before we get there, I did have one other, I think, good prediction I'd like to throw out there.
Do it.
I believe that the biggest opportunity for credit unions coming up in 2026 is small to medium business. And here's why. I think AI is spawning a lot of opportunity for people to begin to develop those. But one thing AI does really well, that's always been a difficult process for credit unions and small businesses, assessing, say, a business plan or assessing that everything's in place for a real estate deal. And because those generally can take months to complete, if that is back to Ann's efficiency piece or yield piece that John was talking about, I think you could double or triple that throughput and really make an impact. And I think that marrying that with personal connectivity within the credit union, which I see sort of being done ad hoc all the time inside credit unions. I think if we were to formalize that, John's raising his hand, and
Well,
I
John,
do it at end too.
John, I'm with you. I'm with you on that. Nimbus did research with filing and discovered that 40% of your members have a side hustle, a small business. Unbelievable, right? And you're probably not serving those small businesses very well, John.
Well, I know Lou drives Uber in the evenings. I got picked up from him the other day. I was coming back from the airport. I was surprised when it was him, but he did honor my "don't talk to me" thing while I go. So
yeah. We had one credit union launch, and I promise I'll get off of this, a brand called Hustle to match that. And it's one of their fastest growing branches. It's an electronic branch, SMB focused for their members. And it's quickly going to become $1 billion branch. It's just on fire. It's growing. So I'm with you, John. It's in reality, it's happening.
I agree with the small business piece as well. And I would also tie it back to John Janklius's earlier point. To me, the greatest concern, and I think that's been the driving force behind a lot of the credit union bank acquisitions, because credit unions historically do not have the small business portfolio, and they see them out there in banks. And again, we're talking about a handful. We're only talking about, a dozen or so each year. But having said that, and whether it's, through acquisition or internal growth, it's a culture shift. It's something that really has to be thought through, whether you're integrating someone and, you might get the portfolio, but you lose the people and maybe they wind up following them. You better figure out how to do it properly. So I think that's still an important piece, but I absolutely agree. It's a major opportunity. I had the one more I wanted to throw in there. Again, probably, hopefully it's maybe a no-brainer without the added kind of nuance. The CFPB will survive, although it'll be in diminished form. I'm suddenly thinking, tied to Rob Reiner again, and director of the movie Misery, the Stephen King book. If you remember that, the writer of the things got hobbled because they just whacked his ankles so badly that he couldn't walk anymore. That's kind of what I think the CFPB may look like. However, I think it will exist. I think there may be enough high profile kind of consumer abuse type, whether you fully agree with them or not, but they're going to hit the press and probably create enough pressure for the CFPB to maybe just wake up just enough to kind of deal with some of that. And I also predict, and again, this part I'm not sure how you measure, that financial institutions of all stripes may start developing a little more of an appreciation for regulation, because they may realize that the lack of clarity that comes with today's environment in many cases can be just as challenging. So, and again, there's the challenge of, I like this better, but guess what? It may totally whipsaw right back to the way it was in 2 years, 3 years. So you got a couple different challenges there. Anybody want to add to that, or should we go on to Bitcoin? And again, just a reminder, right now as we're recording, I believe Bitcoin's sitting at 93,000. Lou, I think you got into a little detail about kind of what the trajectory you see is. So I'll let you go next. She's Anne's really going out on a limb there. She says any place between 85,000 and 130,000. That's a pretty. Then again, having said that, I think we even had a larger range this year. So maybe it's not quite as conservative as I thought.
All right. So Bitcoin in. I don't have the date in front of me. Sometime in 2025, it hit a ceiling of 126,000. So that to me implies that there's no support for Bitcoin to rise higher than that, at least for the foreseeable future. So, the old expression, past performance is not a prediction of future results. Here, I think past performance is a prediction of future results. So I'm predicting Bitcoin ends up around 126,000, of course, at the end of the year.
Okay. John Janklius, how about you?
I'm going to say 110. I think there's going to be some competition from stablecoin against it. So I think maybe we'll see 110. And I've been horrible at guessing this. So I just got to preface it with that.
I'm probably going to say something very similar to you, but stated in a different way, John, is I think that one of the things, and it's probably more important than the price itself, is this wild kind of ride. The original concept was this is a totally new asset that behaves entirely independently of everything else. I think those days are over. I think we're already starting to see that Bitcoin behaves and is tracking a bit more with more traditional investments, and the more it's actually being driven by ETFs and things like that, it's more likely to behave along those lines. So I would expect more volatility than the market as a whole, but I would also expect it not to be quite the wild swings, and probably to track in the grand scheme of things not that far off. Now the trick is the starting point the 92,000 we're at now? Is the starting point the 126 we got to? I actually wound up kind of coming with almost exactly the 110 that you mentioned, because I'm thinking, okay, I'm going to probably assume a starting point of around 100K and appreciation probably in the high single digits. So I think we're winding up in the same place.
I want to hear John say. I want to hear John say 200.
We always finish with John for a good reason.
Well, first of all, who is the leading last 3 years? I think I've been dead on, haven't I?
So give us the real answer. Let's hear it.
Well, okay. Well, let's start off with this. And this is backing some of the information that Glen put together. So in 2024, the correlation with the NASDAQ for Bitcoin was 0.23, basically almost independent. In 2025, 0.52. So it's moving almost 25% more along with the NASDAQ. In the September 2025 timeframe through the end of the year, 0.92.
Really?
So,
wow.
Yep. Now you marry that with Lou's prediction about the bubble, which I happen to agree with. I don't think the bubble gets smaller. I think it gets bigger. I think there'll be a couple breakthroughs, and it doesn't take much with the AI stuff we're working on, that will energize the market in a way that we haven't seen. And when that happens, I'm predicting Bitcoin will go up with it. I'm also factoring in Venezuela, which was a company that had a very unstable currency to begin with. And because remember, this is a global thing. It's not just about our markets. Mm-hmm. And so if we get more instability, like in Taiwan or whatever, if you're in Colombia and you had a bank account in Colombia, they could just come and take it. And they do. Like you might own a car dealership and they go, good job. You got it up and makes a lot of money. Now it's ours. So you can go off and do what you want. So the only way to protect that money in worlds like that we've just destabilized is in the market is by moving it into something like Bitcoin or something that these people can't get there. So don't forget the security aspect of it. I'm predicting 175 by fourth quarter.
Wow. Awesome. I was at 185 last year. Woo. Okay.
I would say, and I don't find that at all outlandish. I could certainly see it. And in terms of appreciation, to your point, John Jay, that's much less appreciation than you predicted last year. So we've got a relatively tight range.
But I would tell you this too. The side of it that is interesting to me is the stablecoin side, because that has a direct bearing on the Bitcoin price to some extent, particularly if you're going to have different retailers have different stablecoins, because how will you convert?
Yeah.
You will convert through Bitcoin like everybody else does, and that could drive it as well. So I'm predicting 185.
Wait,
and
185
I want to go for a 4-peat. So do I get a trophy or something eventually? I'd like a trophy.
We'll nice to get a trophy. One for you.
Yeah. Okay.
But it could just so you're on the record, was it 175 or 185?
185.
185. Okay.
185 in the fourth quarter.
Gone. Okay.
We have to tell everybody, do not invest based on what we say.
What John idiots. Said. If you want to invest based on a 5%, 10% return,
don't invest on anything we say. We are not professionals. Well, we're kind of professionals, but we're not professionals in this space. So we just have to give that disclaimer before someone comes against us.
True. Lou, you and I think both listened in. There was a really cool prediction podcast or actually it was more of a webinar that Plaid put together a few weeks ago, which I thought was a lot of fun. If I can find a link to that, I'll link to that. There's been several good ones, but just in writing, I saw one that came out from the leaders of Money 2020 that I'm going to mention mainly because I always love their title. which was Who the F Knows? And that was the title, literally the letter F. So and I think that's about as accurate as you can get about this stuff right now, given the world we're in.
Glenn, that same webinar, I did finally watch the whole thing through. And so I'm going to end my part of this with taking from that same webinar. My final prediction is that 2026 will be unpredictable.
Very good. I think we can mark that one down on the bingo card right now.
Yeah.
I don't know.
Yeah.
Well, except for my prediction, which will be dead on. So
I'm going to reserve that one till maybe the tail end of fourth quarter next year. We'll see.
Well, and then I think we should do a quick lightning round with the craziest prediction that you can come up with.
Wow.
Let's do it. All right. Crazy prediction. It could be anything. Just give us something crazy that might happen that you think might, just out. And this one, we're not holding anybody to. It's just what's the most outlandish thing you could think of that could happen.
I'm going to go crazy here, and we will see two of the top 7 merge, like maybe Apple and Alphabet, or Microsoft and Meta, or something like that.
You're talking about the Magnificent Seven, 2 of them?
Yeah, yes, 2 of them.
And in this regulatory environment, it may actually pass DOJ muster. Who knows?
All right.
I was going to say, given that we're seeing more of this noise right now, I think that there's going to be some type of a reckoning with the predictive markets, to the point that there will wind up being, let's just say, congressional hearings about insider trading and any type of supervision that might need to be placed on prediction markets.
What you got, John?
Staying in my lane, I would say the NCUA puts a halt to mergers for a safety and soundness reason. They just can't see this much disruption, this much combining, this stuff being done intelligently and executed well for safety and soundness reasons. We'll put a pause.
Wow. Interesting.
Ooh, I like that one. That's a very good one. Here's my prediction. It has nothing to do with fintech. I'm just going to throw out my crazy prediction. By the end of 2026, you will be able to go into some AI, describe a full-length movie, or at least an episode of a show, and have it generated for you. 100% people, plot, the whole 9 yards. And that will be the beginning of the end for episodic streaming television.
Also interesting. And also not as far-fetched as it seems.
You can see it happening.
Yeah.
It might be like with anime or something, in a space where it's a little easier. But if I can think of it, somebody's probably working on it because I'm not that smart. Oh, and my other crazy prediction, Crayons will hire humanoid robots as janitors. Because they don't steal. They can sit in the place all day. They're way cheaper. You pay for them once. And I believe that technology is going to happen. I'm going to try to make it happen by encouraging my Crayon to do it. So
until the AI worm comes in and teaches the robots how to steal.
Well, we'll have to fight them every day. All right. Well, hey, that's us. Thank you so much. Let's just go around the horn where everybody can be found. Glenn, you're not in the cannabis industry, but people, where can we find you? By the way, the best payments guy in the business if you need help with this. And trust me, everybody does in this coming year. It's going to be a lot of work. Go ahead, Glenn.
That 154 Advisors. I'll be out there. I'll be at GAC. I'll be at the NCUSO conference. I'll be. You can find me on the road. You can also find me on LinkedIn. Probably the most immediate way to get me, or Glen.Sarvati at 154advisors.com.
Awesome. Lou, if people were looking for you, and I know they are, I know
in the Uber app, right?
Yeah. So he's a 5-star. I'll tell you that right away.
I will also be at GAC. I think you will also be John Best. And anybody wants to chat with me, I'm on LinkedIn as Lou Grilli, Lougrilli.
Awesome. And the man, the legend, Mr. Janklius.
Well, I'll see you at GAC too. We may have to do a show from GAC.
I think it's a great idea.
Yeah,
we should crash Michael's show.
Yeah.
Lawson's show. Just like don't tell him and just take over. You go in, I'll grab him, we'll tape him up like to his chair, and then we'll take over for like a whole episode. I think that would be awesome.
And I gotta believe Van Leg's going to be out there too. So yeah, crowdsource.
There you go. All right, well, folks, if you want to find me, John Janclays, you can find me at theceocorner.com.
And you can find me at big-fintech.com. And I just can't thank you guys enough. And if we haven't said thank you to our listeners, thank you so much. We run into you all the time lately and just say such kind things. And so we're appreciative of that. I hope our predictions are enjoyable. And I also hope that some of it maybe helps you plan. Obviously take it all with a grain of salt, but there's a lot of smart people on this call. Besides, Glenn. But other than that, I'm just messing with it. Glenn is one of the smartest people I know. Thank you guys so much, everybody, for listening, and take care.
Enjoyed it. Bye.
Thank you.
Bye.
Check back each week for the latest from the BIGCast. Or better yet, we hope you'll consider subscribing for free via Spotify, Stitcher, Apple, or wherever you get your podcasts. If you have questions or comments, we'd love to hear from you. Tweet us at BigFintech. Email info@big-fintech.com. Or visit us at big-fintech.com and click on the Media tab, where you can post a comment or check out our archive of hundreds of past episodes. See you next week.